All right, thanks for coming on today, guys. We've got new digs at the moment, bit of a new setup. As you can see, we're both presenting to the same camera now, not presenting from home, which is what we've been doing for quite some time through COVID last year.
Yeah, the COVID wasteland.
Back in the office, new setup. This is our podcast setup, but we can also do live webcasts with it as well. If we could get some feedback on that, guys.
If you've got any, we're a small business. We're always evolving, always trying to improve what we're doing. So any feedback is always good, especially if there's things about that you want to hear or you prefer a particular structure. I think today it's going to be a meeting of both practical and education.
Absolutely. Yeah.
We'll talk about what's going on in the market first. I think that's always good.
Which is a lot.
Yeah, it's always a lot. Then we'll go into a bit of education and what we think is going to be a good approach going forward, I think.
Yeah, absolutely. In these volatile times, there's a lot to learn. There's a lot we can talk about to help, especially beginner people, improve their trading. Right?
Yeah.
So it's techniques we use that show up warning signs and things like that of these types of pullbacks that we've seen.
Definitely. And so, if you are a beginner, this is probably a good place to start. Some of it's maybe going to be new concepts. You're probably in your research phase. But equally, if you've got some experience, then, there's a couple of strategies in here that will probably be new to you that will probably help with this type of bear market. Just a quick bit of upkeep. If you've got any questions at all during the webcast, please feel free to type them in. We'll address them as we go, or if we miss them, we'll cover them at the end. I suppose this webcast will go for as long as it needs to, around an hour, maybe a bit less, maybe a bit more. It depends.
Yeah.
The market view part can take a lot of time. If you are watching the recording of this, if something does pop up, you're always welcome to give us a call and we can have a chat about anything that we discussed as well. If you do want to watch the recording and you're watching it live, you can jump on our YouTube page where in the education section, they'll be there. And you can always feel free to check out some of our other materials, such as podcasts and other education that we've run as well.
Absolutely. There's heaps of great material on there, guys. If you're a beginner trader, go through some of our past webcasts. You'll learn about TA, technical analysis. You'll learn about options. You'll learn about mini warrants.
Risk management, how to become a trader. I mean, we go pretty deep. We've been doing this for a long time.
Longer than I'd like to admit.
Yeah. That might be a good point just to introduce ourselves, maybe. If you guys are keeping up with our webcasts and podcasts, you probably know who we are. But if you're not familiar, my name is Karo. I've been with the business for about 10 years, and I'm a teacher and obviously a trader. One of my jobs is to help mentor people through our education. And so if you ever come along and do some education, there's a good chance that we'll be working pretty closely one-on-one. I trade the market myself, obviously, and give people advice on their trading and help develop education content.
My name's Tim. I've been with the business also coming into 10 years, I think this November. So, been a long time in here. I came in through the business actually as a client originally. Did one of Carlo's courses. I learned how to trade options, just absolutely loved it, and actually came in as a trainer myself. Did the training role for about 5 years and then stepped up through the ranks as an advisor to being the head of the trading desk. So I now manage the trading desk, also help manage Emerald Financial as well in a lot of different ways. So, I guess I'm sort of proof of concept a little bit of our courses and where it can take you and that sort of thing. So they're very comprehensive and you get a lot of really practical knowledge out of our courses. And
and I'll touch on that at the end. So if you stay on to the end, I'll give you an indication as the type of education you could do if you want to come join us, or if you wanted to trade through us, what that might look like as well. All right. Yeah. Nice. Let's get stuck into it. I might bring, before we do though, it's important to know that any advice contained in this presentation is general only. So it's not tailored to your personal circumstances. And that means you need to decide for yourself as to whether it's appropriate to you. Now that that's out of the way, we'll talk about options in education in a moment. Let's jump across to a chart. So hopefully on the screen, you should be able to see a chart of the XJO. The XJO is another name for it is the ASX 200. It's the top 200 stocks of our market weighted by market capitalization. So when someone says the market was up today or the market was down, generally speaking, they're talking about this chart. There are other types of markets around the world, obviously, but this is the Australian market. There's a bigger one with, I think, 5,000.
This is your 500.
Yeah. But I think most people, when they're talking about the market, are talking about the top 200.
One of the reasons why we talk about the top 200, the XJO mainly, is because we actually trade derivatives on it. So if I've got a directional view of the XJO, I can trade it up, down, sideways, using options, all that sort of thing. So that's why we use the XJO.
Yeah, and as a trader, someone who's looking to generate income stream, it makes sense to be able to want to trade regularly, right? Being able to trade bullish, bearish, and sideways not only means that you look at the market with less biasness, right? It also means you have an ability to trade on a more regular basis, which is the idea of income generation. So what do you reckon, Tim? What's the market up to? You're going to stick your neck out there and tell us what you think is going to happen?
All right. So first things first, I'll just sort of say a lot of what I'm going to first talk technically on the market, right? So what does that mean? Okay. So technical analysis, for some of you that don't know, it's charting basically. So we look at the chart and we look for certain patterns, certain behaviors on the chart that tend to happen again in the future. So if you've seen something happen in the past, it's likely to happen again in the future. That's kind of the rough concept, right? Without going into too much detail. Thank you. So first things first, guys, anytime that I try to approach a chart, first thing I do is just zoom out to a roughly maybe 1.5 years, 2 years. What I'm looking for is where has there been a trend and what's the current trend, right? So as you can see, this was the bottom of COVID. Had a nice, big, beautiful uptrend, high peaks, high troughs all through that period. But now the current trend is what? Sideways, okay? So that uptrend has ended and we're now in a sideways phase. So what's more relevant? Well, obviously the sideways phase, isn't it? Okay, quite simple. Now, medium-term trend is sideways. Short-term trend is what? Down, isn't it? Right? So lower peaks, lower troughs. Okay, so basically we're overall sideways. We're stuck sideways in the pattern. We haven't turned into a bear trend or anything like that from a medium-term perspective, but we are threatening it. Okay. Yep. So if we break this pennant here, this is what type of triangle pattern. If we break to the downside, that's could be a signal of downward movement. Then we'd be looking for 69. If that's taken out, I'll be calling this a bear market, right? So I hate to say it, guys, I haven't got a crystal ball right now. Okay, being stuck in the edge of a triangle pattern like this, we really got to wait for a breakout to have a short-term view. Okay, and that's what I'm really waiting for over the next few sessions. I'm going to break lower. We're going to break higher again. Breaking higher means we'd like to hold the channel. Breaking lower means we'll be challenging that support going into a bear market.
Yeah, I think that's a very fair comment. I think there's a difference between reading what the chart's doing and then trying to kind of forecast beyond that. So as the webcast is about, it's about having a rules-based approach. And something that we do is we, as Tim said, we start out wide. We try to figure out what the medium, longer-term trends are. Then we try to figure out what's more of an active force in the shorter term. We will draw our support and resistance levels in. As you can see, those blue horizontal lines. We'll look for trends, the downtrend line, the counter trend line. We'll identify patterns, the triangle pattern, and we'll look for a breakout. So everything that Tim just did there was disguised about 5 or 6 different rules that we apply on a very regular basis. Yep. It's just that we're so used to doing it that we don't have to do it in that step-by-step fashion. Yeah. I think what I'll add is we ran Sam and I ran a podcast a couple of weeks ago, and we in the podcast we said that that we weren't out of the woods just yet, and further falls had come. And I'm feeling the same way right now. The thing about pennant patterns is they typically break out in the direction of the underlying trend, right? And the underlying trend in this particular market is down. And so more often than not, we would expect it to actually break lower and to retest that 68.50 level. 69.50. If it fails there even further, then 68, I think, or 68.50 is your next target. And that's going to largely come down to, unfortunately, what the US does.
Yeah, that's exactly what I was just running through.
Yeah, I think that's the next. That's the our market is like is not really allowed to do much without the US's permission, and quite often we'll simply follow what they do the previous night and also what their futures do during our session. There's other forces in play, obviously, the Australian dollar, the miners, how China's trading as well, all those types of things. But I would say that our main driving force on a day-to-day basis is certainly the US.
Absolutely. I 100% agree with that. Now let's apply the same theory to this chart and see what we get, right? So once again, going out a couple of years, we've got a huge uptrend in play, much larger than what we saw on the XJO, right? How many times like that? That's about almost double.
That's yeah, I measured that before. I think it's about 120%. If you click at the bottom there, I'll hold shift. Oh yeah, there you go.
Very hard to see it from back here. Might be able to see that.
Yeah, about 120%.
120% from the lows of COVID, right? We didn't rise that much.
We rose about 70.
So that's the first thing
I think
have to say. So that was a huge trend. I've never seen anything like that before. So it's just mental. Okay, a big trend. I'm going to flick this across to a weekly real quick because there's a certain pattern that's happening up the top here that's really important from a technical standpoint. Okay.
So Tim just glazed over something real quick. What we were looking at prior was a daily chart, and now we're looking at a weekly chart. So each bar represents 1 week of trading. And that's a great thing to switch to when you're looking at a really broad chart, because you want to simplify that data a little bit to make it easier on the eyes.
There are literally probably hundreds of different technical patterns. Things, right?
Yep.
But one of the more common ones that you're going to read about and learn about is a head and shoulders. The other's a double top. Okay. Now, this pattern here, the head and shoulders pattern, you got a shoulder, head, and another shoulder just here.
Yep.
What we look for is a break of the support level at the bottom here.
Yeah.
Okay?
Also known as the neckline.
Also known as the neckline.
Or the collarbone.
Right. And that's actually happened a few weeks back. Okay, but it's really confirming it now because you've got a massive bearish signal here below. What that is suggesting, okay, is this uptrend has come to an end, and now you're going to reverse some of that uptrend. That's why they call it a reverse pattern. And what they say, and this doesn't always play out perfectly, but it tends to play out pretty closely in what I've seen over the years. Okay, is you take the distance between the neckline and the head, and you can then bring that to the downside for a downside target.
Yeah. I would say that the broader the longer the pattern is. So if a pattern goes over 6 months to 12 months, the longer it is, the less likely you're going to see exact kind of movement. So it's got to be like, if you do a 5-year pattern, I don't think it's going to be too accurate compared to say a 2-week pattern. Just to kind of clarify what Tim's saying there.
The other thing that really, for me, validates this head and shoulders is the fact that we've come off such a huge trend. Okay. And I honestly can't recall a time where I've seen such a clear pattern on an index like this. I've seen this on stock very often see this on stock where a stock shoots up, right? Really sharply. This index is behaving like a stock, like a really aggressive growth stock.
Well, I mean, you could look at the NASDAQ, which is an aggressive growth stock, right? And I'm sure the S&P 500 has plenty of them in there too.
Yep.
That's looking more at the fundamentals, I think.
So look, at this point of time, this is indicating, and this is just an indication, and the way I take this in, right, is that if nothing changes the current mood, as in, I can see here for the next half an hour talk.
Sure.
So
yeah.
It's gonna kill too much time.
Yeah.
The current sentiment is negative for multiple of reasons: the Fed, inflation, blah 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 blah.
Yep.
Right? Unless something comes in to change that dynamic, I believe this will play out.
I agree. I think that you've even had the retest of the neckline, which is a typical feature of that chart pattern. Your line's kind of hiding it, or the week kind of hides a little bit.
I'll go back to the daily. You can see where it's popped back up.
Yeah,
that's what Karo is referring to there, guys.
And look, there's a few different ways that you could draw that neckline, but I'd probably agree. I draw mine a little bit slanted to try and bring in the other shoulder a bit more, but ultimately it shows the same data. And that's the thing, is you're always going to find different ways to apply the technical analysis, but the idea is to come to a similar conclusion, I think. And so I think it'll play out. I think that 3600's on the book. But I think you're going to need a continued fundamental drive to get down there. I don't think the technicals are enough to push it there. I think you're going to need the Fed to continue to scare markets. I think you're going to need China to be still on the rocks. I think, I think the things that are plaguing the market now will need to continue to plague the market for that to play out. If there's a shift in sentiment due to it, if the market came out, if they came out tomorrow and said, no, we're going to lower interest rates or something like that, I don't know, something crazy, then all this kind of goes out the door, right?
Oh, absolutely, right. So yeah, put a little bit of flavor around that. If inflation starts coming down, the Fed starts backpedaling and saying, hey, no, we don't have to lift rates as much, which means you start seeing bond yields fall, things like that. That's going to turn the equity market pretty damn bullish quickly.
Yeah.
On the other side of all this, guys, I'm extremely bullish. I honestly am.
Oh, for sure.
But this could take 6 months to play out.
Yeah, everyone should be building shopping lists, right? So your priorities are, if you can't trade bearish markets, which a lot of people who buy and sell shares can't, then what you should be doing is managing risk and building a shopping list, basically. Because, and by the way, I mean, particularly the US market, they're just natural bulls. I mean, if you think about the American themselves, they're natural kind of loud and boisterous and aggressively positive, and that plays out in their market. I mean, I think that's part of the reason why I saw 120% growth from the lows rather than say 70 or what we did, and you compare other world markets as well. Yeah,
I think the other thing I'd say is if it does get as far as 3,500 would be where I would start thinking about buying some stock.
Yep.
It's one of the key targets, right? So you got the 200-day moving average there on the weekly chart. The Fibonacci retracement line up there as well.
Yeah.
I don't know if you want to draw that in or not. Is it too much probably for the webcast?
Throw it in because why not? I mean,
I'll do it better than me, so I'll let you do that.
Take 2 seconds. Problem is, I don't need, my eyes are pretty good, but in order to do this type of stuff, which one is it? Yeah, there it is. So you got to start, basically, I mean, this is kind of like a cheat sheet for support levels. It kind of just helps you get an idea. So you take just as a quick thing, you take the full bull run, and then you try to figure out where, if it does have a retracement, which is what we're seeing, where the levels of key levels of support are. You can see one played out right where the neckline is, right there. That's your 23 point whatever. Your second one is roughly where the market is now. And then your third one coincides roughly with the break of the head and shoulders. Yeah, that's a quick lesson in FIB.
Yeah,
but
it's very quick.
Yeah,
it covers so much in an hour long with.
Yeah. So yeah, I think you would need that sentiment and just to clarify, technical analysis is probably the best tool that you have for short-term trading. That's probably the best you got. But in the medium term, fundamentals really just have to come into play. And that's why Tim and I are saying, well, for it to get down to 3,500, you still need fundamentals to support that. You can't see positive fundamentals. You can't see a positive shift. And for the market to continue to play out technically bearish, that wouldn't make sense. So yeah, that's why we've got to differentiate between the short and medium.
Yeah, look, if you're trading for a couple of days, a couple of weeks, even to a month, that's your time frame in your trades, then you're going to be leaning on technicals more than fundamentals. Because at the moment, the themes of the fundamentals, this is just switching and swapping around every day, right? Like, this is why the market's so whippy. The mood of the market in the short term is just all over the place. You want technical analysis because fundamentals are just hard to follow right now.
Oh yeah, I think. Oh, for sure. I think that's the way it is at the end of the day. And that's why it's kind of hand sitting at the moment for all of us, even traders. Look, I mean, you can always trade stocks that don't follow the market. I mean, that aside. But in terms of trading this particular index, what do you say there? Do you know what I mean? It's hard.
Yeah, so guys, look, if you're out there trading, like there's a lot of people that came into the market through that massive uptrend, right? In the last couple of years after COVID, right? Huge amount of, especially younger traders hitting the marketplace. And through that period, it was just easy, guys. Honestly, that was one of the best trading periods I've had, right? And all you had to do is go long and sit and wait. Honestly, that's how easy it was to trade over those last 2 years. But I've been around a lot longer than that, right? And I know that the market's not always that easy. And in these types of environments, you can see still a great amount of trading out there, but you've got to start using a lot of strict rules. Okay. To make money out of this type of market, you've got to be really, really strict to rules, guys. Okay. Which means you've got to have entry rules, which is the technical type rules we've been talking about. Okay. We haven't gone through each rule, by the way, guys. Once again, it's 2 days to teach this stuff. In an hour webcast.
We wouldn't want to anyway.
It actually takes more like 2 months, I should say, to teach it properly. But like, so you got your technical side of it to get you in. Then you've got different strategies you can deploy using different financial instruments like options, mini warrants, or just buying stock directly.
Yep.
But then you've also, when you get in, you know when you're getting out, right? So that completes your rule set. And you've got to have all that, especially in this environment, right?
Yeah.
Because we can trade bearish markets. You don't have to sit on the sidelines, right?
No.
You can trade sideways markets. I'll show you a strategy using options where we can trade a sideways.
Yeah. Did you want to go through options now?
Yeah, that's a good segue across this one.
So as Tim's saying, like as traders, we can trade different market conditions. One strategy that everyone knows is buy low, sell high, right? You buy the stock when it's down here and you sell the stock up there, albeit it's easier said than done. That is a common strategy. But there are more advanced share strategies like averaging down, right? That's a simple one as well. We use derivatives as a way to trade different market conditions. And one of the derivatives that we really like to use, it's very popular in America. I would say less so here, but we're hoping for that to change, is options, right? I'm just trying to find which one we need. The problem is I can't see a white cursor over a white. Oh no. Where's the presentation? Here it is. Let me do this. So why do we like option strategies? The main reason is we like flexibility. They are by far the most flexible instrument you can trade on the Australian market, bar none, right? I would even say probably other world markets too. You can trade any market condition using options, right? So it doesn't matter if the market's falling, going sideways, going up. It can be a combination of those things. You can trade bullish, bearish, and sideways. You can profit from multiple directions. Just to give you an idea of what that means is that you can do trades where you profit if the market goes up and sideways. You could profit if the market goes down or sideways. You can even do a strategy, which we like to use around reporting, where you just need the stock to go up a lot or down a lot. You actually just take out the kind of guesswork on which way it's going to go after its report. The other reason why we like options is they provide leverage. Leverage is something that you should treat with respect, but ultimately what it means is that you have more flexibility, right? You can generate higher returns with using less capital. The flip side of that, though, is that you can lose quicker, right? When whatever strategies we teach our clients, they're always capped risk. So you can never lose more than what you put in. But with leverage, you would lose that money quicker, right? Just as much as you would make more money quicker compared to stocks. So what are options? Well, they're a derivative that are traded through the ASX. What that means is they derive their value from the underlying stock. So share price movement equals option movement. As the share moves, so does the value of the option. All right. There are two types of options. There's calls and puts. Okay. And if this is going over your head, don't worry. That's not really the point. Call options increase in value when the underlying stock goes up. So for example, you could buy a call option on CBA, right? Commonwealth Bank, a very popular stock on our market. You could buy a call option on it instead of buying the stock if you wanted to. If the CBA share price goes up, the value of your option also goes up. It'll just go up more often, right? Because it depends on which option you choose. Put options, on the other hand, increase in value when the underlying stock goes down. So if you bought a put option on CBA, you would make money if CBA's share price fell. So it's a very simple way of trading a bear market, right? It's not the only strategy, and it's probably not good for all environments, but it is one simple strategy that you could implement. That might be a good opportunity to talk about a portfolio strategy.
Yeah, so I've together an example, things that we're in a bit of a bear market at the moment and we've seen the market crash off a little bit. I wanted to show you guys an example. This is one of the traditional ways of using options is actually protecting a stock or protecting a portfolio. So I've actually got something together to go through that now.
Yeah, and then I'll run through more advanced strategies.
All right, so just real quick here, zoom in a touch. So in this example, I'm buying BHP. Okay, it was trading at $47 this morning when I was pricing this up. I've got 900 BHP shares that I want to protect. Okay, at a value of 42,300. Right. So look, something's happened. I think BHP could fall off for a period of time. Don't want to sell my stocks. I've owned them. I've had them for 10 years and I've got capital gains I have to worry about, or for whatever reason. Okay. I prefer to hold on to the stock, but I've got a really strong conviction that the stock's going to fall. Okay. So what I'm going to do is buy an option, and the option that I've bought is got a $47 strike. Okay. I'll just quickly show you that also on my option calculator here. All right. So this is the option that I've bought. It's a $47 strike. It has an expiry of 21st of July. Okay, so I'm buying protection out to the 21st of July. Right, the further I go, the more expensive the protection gets. The closer in, the cheaper the protection.
That makes sense, right? It's like insurance. If you want insurance for the next 5 years, it's going to be more expensive than if you want insurance for the next 2 weeks. Right?
Right. So as Karo was explaining before, the function of an option, right? A put option, it goes up in value if the share price falls. Right? So you can see here, right now it's worth $2.59. Okay. What this matrix shows you is share price movement across time. Okay. So I'll adjust this in a little bit because that's 15-day increments. It's pretty big, right? I'll put it to a 1-week increment.
Just to specify though, that middle number is the current share price, right? Just so that we're clear. The y-axis, the middle number is the current share price, and then you've got 1% increments higher and 1% increments lower, just to kind of project what the value is at different price points at different points in the future. Yeah.
Now, what this matrix allows you to do is you don't have to sit there and understand exactly how an option price works, okay? Because there's a lot to it, okay? And I'm not going to even touch on that right now. But this calculator, it actually works it all out for you. So you can put in whatever strategy you want up here. In this case, a bought put option, okay, 27. And then this projects what's going to happen with share price and time.
Yeah.
So you can see if this falls down 5%, it's going to go from being worth $2.60, right, roughly, to $3.75, maybe $3.60, depending on time. Okay. And vice versa, if it goes up, it's going to lose value, and I'm going to lose on that particular trade. But let's have a look at what that looks like against some stock. Okay. So I'm buying 12 contracts. Okay. The insurance is going to cost me $2,880, which is 6% of my actual value of my stock. So I'm committing 6% to cover insurance. Okay. You don't have to think too much in that, but this is what I want to show you, that the power of what you can do with options. Okay. Is, all right, what happens if the share price falls 5%? Right. Well, my stock that's worth 42,300 is now going to be worth 40,185. Okay. It's going to go down by $2,000. Right. That's how much the option, the share value's gone. But my option value's jumped up. Okay. So now my option's worth 4,700. That's what I paid to get in for my option. I'm now left with a value of 42,000. I'm only now down
a couple hundred
bucks, right? On a 5% movement. Cross to a 10% movement, I would be down 4,200. Okay, I'm pretty much break even, aren't I? Right? Because what's happening is you can see my stock value is going down, but the option value is shooting up to protect me.
Yep.
Right. So I've basically hedged myself to the downside. 15%, same deal. I'd be down $6,000, but I'm not, because my option value's gone the other way, gone up. That's offsetting it. All right. So in all of these examples, I'm either pretty much break even or even up a tiny bit if it keeps falling.
I think the further it falls, the more you'll actually be in front.
Yeah. Yep.
By looking at that trend.
Getting closer and closer to a delta line situation.
We won't get into, yeah.
Won't get into. All right. So look, that's just proven how the hedge actually works, right? But what happens if it goes the other way? What if the share price goes up, right? Well, I'm going to lose value in my option, okay? But what's happening at the same time is that my stock's gaining value, all right? So I have to pay for my insurance, guys. Okay. The value that's left in my option is $720. Okay. The share value's gone up. All right. The insurance cost me $2,880. I've still got $42,255 in the bank account though. Right. So I'm basically where I would have been regardless. The only thing I've missed out on is upward movement, haven't I? Right. I would have gained 2,100 if I didn't take the insurance out. Right. So the cost of insurance has been covered by the stock. So I'm actually not down any money by buying the insurance, but I guess it's an opportunity risk.
Well, that's why you said it cost 5-6% before.
Correct. Right. So what's happening here, guys, is if the share price runs up, I'm not losing money. Like I haven't taken money out of my back pocket because I can just sell a little bit of my shares to cover the cost of that insurance if I want to. Right. So I'm not really out of pocket, but I've missed out on upward movement, haven't I, of about 5%. You get paid for that.
Yeah, and so insurance isn't something that you would want to have on all the time, right? I mean, this is not like house insurance where you're just going to have to cop it, right? This is insurance that you put in place when you're starting to see markets being overstretched, right? And there's plenty of warning signs that I mean, I reckon we've called every crash that I can't say everyone, but we've called a lot of pullbacks. Sometimes we're 2 weeks off, sometimes we're 3 weeks off, sometimes we're a month off. Sometimes we see these things and then the market takes a week to play out our view, right? Not a week, a month to play out our view, maybe even 2. So at those points, you can start to implement these protections because you might only need a couple of months of protection. Maybe you only need a third month. And if the market's tracking sideways or are going up 5% during that period, well, you're kind of covered already.
Yep.
But it helps you sleep at night, I suppose. You know, you pay for that peace of mind.
Well, it's peace of mind, but let's just say hypothetically you're about to go on a 2-month European holiday or something like that, and you know you got a sizable portfolio, and you know you're not going to be watching it,
and COVID doesn't exist,
and you're in the middle of a pandemic, or you got the Fed increasing interest rates at 0.5% each month, right? Hypothetically, you could actually protect your whole portfolio by using XJO options.
Yeah, and I think there's something you could implement now. If you were still bearish this market, you could implement it now. If you're not bearish this market, well, I guess you better know next time.
Yeah. All right. So that's that example.
That's a good example of how you can use options with your portfolio. If I could grab the stuff. And now I'm going to run through some other strategies and then bring it back to Tim. So here we go. Okay. So we also have something called spread trading, which is basically when you use more than one option to achieve a desired result. Spreads have more than one leg, which is more than one option type. So it's about using a combination of calls and puts, a combination of writing and buying, and basically some options wizardry to achieve specific outcomes. And it's through this that we're able to actually trade multiple directions at once.
Mm-hmm.
So, and I think did you want to run through a bull put today?
Yep, I've got one.
So we'll show you an example today called a bull put spread. With the way that we implement it, and there's many different ways you can implement it because options are the most flexible thing you can trade. Mm-hmm. The way that we implement it, it allows us to profit from bullish movement as well as sideways movement. So you actually get paid for sitting in the trade. And we mainly use it as a defensive position. So in this particular market environment, I think you kind of need to be defensive. Mm-hmm. And so, I mean, you can always try and snipe a few things, right? But I would say being defensive probably on the whole is a better approach. But there's other strategies as well. Like I mentioned earlier, you can do completely sideways driven strategies. There's like I said, a reporting strategy that we like to do where you'll actually profit if the stock goes up a lot or down a lot. And just to kind of talk on that a moment, twice a year, companies release their forward guidance as well as their the past 6 to 12 months of profits and revenues and whatnot. Yep. And on the back of that, stocks can move, 5%, 10%. Blue chip shares can move that, perhaps more, perhaps a little bit less. But often we get some kind of movement, right? We can see often it explode higher and we can sometimes see it explode lower, but it's hard to actually know what that's going to be, right? Because even if you did have inside information, which is super illegal, you don't actually know how the market's going to react to that information because we've seen good reports lead to falls. We've seen bad reports lead to rises because it's about expectations and forward guidance and where the stock is placed at that point in time, right? So rather than trying to pick direction on the back of a report, what we say is, look, we think the report's going to lead to a lot of bullish movement or a lot of bearish movement. And my rule of thumb is about 5%. I'm looking for about 5% movement. You can implement an option strategy where you'll make money if the stock goes up about 4 or 5%, and you'll make money if the stock falls at 4 or 5%. And I think this is a really interesting strategy that you can use around reporting. But there's a few things that you need to consider before entering: volatility, when you enter the trade, a few other things like that. But I thought that might be a good one to kind of talk about as well. It's not something we're going to do in this webcast because it's not reporting season.
Well, that's it. We're not quite there yet, but we generally run a bit of a webcast around this strategy in sort of early August. So we'll probably do that again.
Well, for my, I run a webcast every Wednesday, as Tim knows, and it's from 12 to 1. It's just for our clients. And I go through options education, and around reporting season, I do, 2, 3, 4 webcasts, depending on the reporting season. And just look at that particular strategy, looking for trades on that particular thing.
And look, this sounds really complex, right? And it is if you don't know what you're doing. If you just go out there and start reading books on this stuff, honestly, you're going to get lost, right? I've been there, tried it before. What we do here, and we've been doing options. Well, Carlo's been teaching options for 30 odd years, right? He's been an educator even before Trader Circle existed. We have refined it over the years into what we call our cookbook. Okay, so you learn technical analysis. You're going to come and learn how to trade options, but you're going to walk away with a cookbook and that calculator I had up before. What the cookbook does is it explains to you, if you want to go sideways on this stock, this is how you set up the strategy. Step 1, step 2, step 3, step 4. Put this leg here, put this leg there, put it into the calculator, have a look at the risk and return and see if you're happy with it. Right. And then Karo, Ben, and myself, Sam on the desk, we're here to help you as well. Right. So you can call up and say, look, I've just set up this strategy. Can you just have a quick look through and see whether I've missed a rule? If I missed a step, is there anything I should be considering here?
Yeah, or like you can tweak it, right? I mean, because there's a lot of flexibility in options, we'll give you the structure and kind of like a carbon copy approach to trading these strategies through the cookbook. But there's always ways to tweak it in your favor. There's always ways to tweak it into your risk tolerance. And that's what we're here to do when you don't have that experience or that knowledge. We'll help you kind of tweak that,
So
right?
we simplify it, right? We get it to a point where we give it to you all in bite sizes over a period of time, right? If you come and do our full course, it runs over something like 6 months. And you got the guys here that will teach you how to do it, right? Honestly, if you try and do this yourself, just looking at books and applying it on the market, not having our rules, it's going to take you years, right? It took Carlos years to get good at this. You're going to learn this in 6 months, right? So with derivatives, and I hate doing these webcasts without giving this warning. With derivatives, you need to get educated. You need to have a set of rules. You need to know when you're getting in. You need to know when you're getting out, right? So I can't stress enough. Don't just go read a book on this and start trading options.
No. You can't. I don't think you can.
Don't do it.
I think it'll kill you. You can go have a look at the US if you want to see what people are like. Options are go have a look at how the US has dealt with those. But I always say that you either need really good education or you need a mentor, and preferably have both. So you either need your best mate who is already a super trader to kind of help you do it, or you need good education, or you need both. And we can provide you with both. That's what we do. That's what our job is.
And even if it's not us, just get educated with it.
Yeah.
Just
if there's one thing you took away from this webcast, it'd be go get educated for sure. Don't self-educate. My old man said you can't help yourself because yourself's an idiot, right? That's what he used to tell me.
That's a good one, actually.
It's good advice. It's insulting, but it's good advice. But let's continue on here. So actually, we're going to run through the bull put, won't we?
Yes.
All right, let's
do that. So once again, I'm going to use BHP as an example, just because BHP is one of my favorite stocks on our market at the moment. All right. So why am I looking at BHP as well? Okay. One of the big reasons, guys, is technically. Okay. What's the trend? Well, it was up. Okay. Through here, that trend line's broken, and now we're in a bit of a sideways phase, aren't we? All right. I'm going to clear off some of these lines, guys. It's just way too much going on. In this
I was going
chart.
to say even from our there you go.
That's better.
It's pretty.
All right. So there's a very strong support level formed down here. 1, 2, 3, 4, 5, 6, 7 touch points.
I'd say so.
Okay.
Why not?
Very reliable. 44 represents a very, very good price for this stock, in my opinion, especially with iron ore still above 100, with copper up at current prices, all those sort of fundamental reasons as well. From a price to earnings point of view, extremely cheap. From a yield point of view, dividend yield point of view, extremely cheap down here. I can talk about BHP all day.
It's a great stock, right?
It's a great stock.
It's just a good stock all around.
Right. We had a pretty big pullback, right? And that was roughly around where people starting to talk about China locking down and things like that. There was a bit of worry at that point of time, and that's why you had such a harsh sell down through there. But what's it been doing since? It's just been tracking sideways. So I say to myself, look, is this stock ready to go up? Maybe not. Like maybe not in this environment, guys. Right? You know, the market, US market's going into a bear trend. You know, there's a bit of volatility out there. But this stock is very, very well placed. So what's it likely to do in this environment? Well, probably sideways, right? And it's also short-term stuck between a support and resistance level. So I can't bet that it's going to keep rushing up over the next few weeks, can I? Right? But could I put a trade on with the belief that this support level is going to hold all the way down here?
I will say, though, there is bullish divergence on the stochastics as well.
Mm.
So it would, even though it appears more sideways, it's still got a bullish twang to it, if you will.
Yep. So I'm bullish the stock overall, so I don't really want to do the bear call side, which is the other side type of strategy, but you're slightly bearish, right? So what I'd be looking at is what we call a bull put spread. Okay, don't worry about the name. All right, it's just a name. Okay, don't get hung up on that. All right, so I'll earlier on it was pricing up a little bit better, so I'm just going to move it out an extra week in time just to make the prices look nice again. All right, so all right, so I'm not going to go through how I've constructed this or anything like that. It's just too much. But what I want to show you is how this strategy works. Essentially, the market's going to give me $1,200. Okay, I'm going to get a credit for entering this trade. Right, so just to blow your brain a little bit more, I'm going to receive money to open this trade. But when you receive money from the market, right, when you short the market, when you receive money using options, you're always going to pay margin to cover risk. Okay, so I'm going to have to pay a $4,000 margin, but I'm going to receive $1,200. Right. So the net, it's going to cost me money to do this trade, right? There's no free lunch in this market, that's for sure.
No.
All right. Now, all I have to really look at, though, is this matrix. This matrix tells the story, doesn't it? Okay, so don't worry about any of that stuff up top, right? This is all you really have to look at. Now, this is what we call a sideways strategy. Why do we call it a sideways strategy? Well, I don't actually need movement to make money, right? Have a look at the matrix here. This is set on a 5-day increment, right?
And to clarify, that is pure profit and pure loss. That's not the value of your position. That's how much money you're making or losing. And someone's asked, are you on a 1-day or 5-day view? I would say that when Tim's talking about BHP, we're talking probably anywhere from a week to 3 weeks, maybe 4 weeks, something like that.
Yeah, if we're talking time frame, then yeah, I'd be. Yeah, like at this point of time, it's shorter term, right? So this strategy I've built, it goes to the 16th of June, which is roughly 3 weeks, right? Yeah. So in the next 3 weeks, what I want out of this strategy is either for it to go dead sideways, it can go down a little bit, right? Can you see I'll lose initially, but on expiry, I still make my $1,200. I'll click over to a 2% increment. Where I start losing, guys, if it goes below that support level, right? So you can see here, if it starts going below support at 44.50, I get myself into trouble.
Yeah.
So see how, and that's what I meant before about setting up a trade based on that support level. And that's exactly what I've done here, right? I simply wanted to stay above that support level through to expiry. If it goes up, beautiful, I'll get some breathing space, but I still want to wait for expiry. If it doesn't move up, just want to wait for expiry.
Yeah. So one way that I like to express that to people is that ultimately what you're doing is you're using that really key level of support as a defensive position. So if we quickly just go back to the chart, the actual chart.
Actual chart, yeah.
So it's fair to say, when was the last time it actually traded below that level? When was that?
Last year, pretty much.
It was in Jan, right?
January.
So for the past like 4 months, right? Maybe even 5 because it's the 11th of Jan. BHP has not gone below that level in any meaningful measure. And so we might not necessarily feel comfortable at the market. We might not necessarily feel comfortable about commodities, China, even BHP. We might be like, we might not have a particularly strong bullish view, right? But we don't care too much, right? All we want to do is make sure that the stock stays above that level. And that's what we're achieving with this strategy. So that come expiry day, doesn't matter if it's gone up, doesn't matter if it's gone sideways, doesn't matter if it's gone down 5%, you still make your maximum profit, right? And that one of the drawbacks of this strategy is that you are capping your profit to that $1,200, right? Whereas with other option strategies, you don't get that benefit, but your profits can be infinite, right?
Yeah.
So that's how I like to kind of explain it sometimes.
Yeah, good point. The other thing with this support level, it's been a strong level pre-COVID as well, right? So this is not just a new level of support. Pre-COVID, BHP was hanging around this level for quite a bit as well. So
yep.
I really can't emphasize enough, I really like this level, and that's why I'm considering this strategy, right?
Yep.
And that's the benefit of technical analysis, guys, right? It just reinforces certain levels to the point where you can find trades based on that level. The other thing I'll just quickly show you guys, we put recommendations out to our clients, and we had actually this exact strategy on and expired Thursday that just passed. So you can see here, we had a put at 44.51. So the exact same strategy, but for the 19th of May. Okay. We got 14 credit on the way in. I'll just go into the trade analysis. All right, so this is what we sent to our clients. We sent it out on the 27th. Okay, so it would have been in the trade once again for about 3 weeks.
Yep.
Okay, and you can see the analysis. So you got the chart there. So it's probably a bit hard for you to see, but same support levels based on that. It was just after that big crash. It fit our rules, and we suggested the trade. We send you out a matrix of the strikes. We send you out, all the P&Ls, all that sort of stuff of what we're suggesting, some analysis, and then you can just choose how many contracts you want to do, right? We'll suggest a minimum amount. You can increase that, decrease that, but you want to be doing pretty close to what we suggest.
Yeah.
Minimum.
Well, I mean, look, what your risk tolerance is something that you're going to have to develop over time. It's not something that's going to be immediate to you as a beginner trader. We do set recommended minimums because, after brokerage, sometimes it's just what the minimum is. But yeah, obviously you can always do more.
Yeah.
Did you explain what the risk was on the previous strategy?
I didn't go into it too much, right? But this strategy here, the one I priced up before, which I have in the matrix at the moment, the maximum risk is 3,800. Okay. So that's if I do nothing. That's if I let it go to expiry day and I do absolutely nothing and let it fall through both of my legs. Okay.
So because you receive $1,200, but if I gave you $1,200 and then you lost it, that's not really a risk, right? That's you just losing money that you found on the ground. There has to be actual risk that you have to put up.
Correct.
And the 3,800 is what you could potentially lose at most, right? So any strategies, again, that we teach, if your risk is always defined, it's always capped. And the way that we teach you is that you always be looking at this payoff matrix.
Correct.
To know exactly where you're going to get out on the upside.
Yeah.
Because even though if we wait, we can make $1,200 profit. If it rallies 5% in the short term or 6% or whatever it is in the short term, we might close early anyway, right?
Yeah.
You might be happy to take your $1,000 and just move on with your life, right? But you also want to know to the downside, how much you're losing, when, and have contingency plans in place.
And Karo just brings up a really good point there, guys. And this is the difference between trading and gambling, right? Like if you go to the casino and put red or black, you're going to win or lose, okay? With trading, you can close early. You can get out at any point you want in this trade and just take a small profit, right? You're in full control with that, okay?
provided the market's open, it's not in a trading hold, or like the world doesn't blow up. But
Exactly right. Yeah, but if the world's blowing up,
You
you
got
got bigger
bigger problems.
problems. Right. But look, every trade has a risk. You cannot get, there's no risk free. There's no free lunch in the market, right?
No.
Everyone's looking for the golden goose with options. That doesn't exist, right? I've been
anything.
doing this for 10 years. I can tell you it doesn't exist.
Or
okay?
it doesn't
It's
exist
always
with
a risk.
options, doesn't exist with stock. It just doesn't exist.
Right.
If you think you're smart, by the way, there's 100 people who are smarter than you who've already figured it out, made money from it, and cleared up that arbitrage. It doesn't exist.
That's it. That's it.
They've got
right?
computers for that.
Correct, right? But so with these strategies, don't get hung up on am I receiving credit? Am I doing this? Am I doing that? Don't get hung up too much about how this actually works, because you'll get a cookbook or instruct you how to build this strategy. You throw it in the matrix. It tells you your P&L. You make a decision based on that. Are you comfortable with that? Yes or no? Does it look reasonable versus the technical analysis that you've learned? That's all the requirements, right? You put your stop in play. Obviously, for us, the stop would be that support level. If it looks to come down and crack 44.50, well, I'll get this back to a 1% increment. Okay. If it goes down and tests that level, day one, 45.20, I can close for a $600 loss. That's pretty reasonable. If it goes below, oh, sorry, I said that wrong. Sorry. Change it so I can actually show it properly. I need more. It still didn't put enough. We're actually quite a distance away, aren't we? That's almost 44.50 there, guys, right? So right on the stop, you're looking at about $800-900 loss, which is a lot less than the full risk of 3,800, isn't it?
Yeah, it's about 23%.
So even if it dips a little bit below 44.33, it might get up to 1,000 or something like that. Okay. And you know, as a rule of thumb, from a trading perspective, it's okay to lose 20% on a trade, right? Like you're not going to get them all right. And if it starts moving against you, you use your stop, you get out, and you make it on the next one, right? That's the whole aim of the game.
Yeah, I mean, look at again, risk tolerance is an individual pursuit. We'll give you structure and guidelines, but over time, it's going to be something that you discover about yourself. And the only way that you can really do that is through experience. But it's always good to have a guide. It's always good to have someone helping you.
You got to have the guides. You got to have the rules to stop the psychology from creeping in and avoiding closing, right? That's why you got to have some strict stops in play that, you know, if they do get cleared, if there's certain things line up, you've got to get the hell out of there.
Yeah. I mean, psychology is really what it's all about at the end of the day. And if that doesn't resonate you with right now, it will at some point. I promise you that.
Yeah.
All right. Well, are we getting towards that kind of time? Is there anything else you want to run through?
I think that's the main sort of strategies. Look, I've gone straight for one of the sideways trades there. There's so many other things I could show you with options, guys, but I wanted to show you that particular strategy because it's very unique to options, right? You can trade bullish and bearish, long or short, using different instruments out there.
Yeah.
But this is the only instrument where you can trade sideways. You're actually making money from time decaying out of the options, right? There's no other instrument out there to allow you to do this. Okay. And that's why we like options so much. There's just so much flexibility there.
Yeah. There's All right. Well, I'm just going to run through some of our education. So if you guys are interested in coming along and learning how we do some of this stuff, there's a couple of ways that you can do it. One way that I want to talk about it now is by bringing my mouse over here and clicking. I want to talk about how you might become a trader, right? So a lot of people are kind of in this first step here where, you know, you're a little bit confused and you're doing a lot of reading. You're perhaps down that path of self-education, which again, Tim and I don't really recommend as a short-term trader. Just to give you a quick analogy, we're only talking about trading when we say that. If you want to teach yourself to invest, I think that's a different kettle of fish, right? Because ultimately by trading, you're entering a high-risk environment. Why? Well, you want to generate abnormal profits. By definition, you want to try and beat the market, essentially. You're trying to make more money than usual, then you are automatically stepping into a higher risk environment, okay? Unless you're doing something illegal, which has its own risks anyway, right? So that's why you need education, right? The more risk you do, the more education you need, right? If you're walking down the road, getting from A to B, walking down the road is very simple. You learn it when you're very young and carries very little risk, right? In complete control. If you want to get to A to B quicker, you can drive a car, which is one of the most complex things you own. You could crash, it could explode, blah, 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 blah. And before you drive a car, you get educated both with the written and practical. You have someone hold your hand and yell at you in the backseat of the car. And, you go through the rigmarole to get a license, and then you're allowed to drive, right? So trading's the same. If you're at that stage, you're probably realizing now that you need some proper education, which is the second stage, right? And the second stage is where we come in, right? And we not take over, but really kind of help guide you to get to the third stage, which is to actually trade live and start achieving your trading goals, right? And be a little happy chap there. So our approach is about providing structured and practical education, right? And I would say what really separates us from other businesses out there that provide education is that for us, it's all about support, and it's a stepping stone, right? It's a means to an ends. And that ends is hopefully you turning into a successful trader.
Yep.
Education's not really a profit center for us. It's not something that we really make money from.
No.
Education for us is a way to help you become a successful trader. And if we can do that, then you're likely to continue your relationship with us, continue to use our services, and continue to trade through us. And that's what keeps our doors open. Okay, so we have a really strong incentive to give you really good education that's practical and get you to the point where you're hopefully making money. All right, so we have a program. It's called Trade Like a Professional, and just skip a slide. And what you'll learn is picking direction with technical analysis. You'll learn different trading strategies. So we'll teach you basic bullish and bearish strategies, but we'll also teach you multi-directional strategies using options as well. We'll teach you risk management. And the framework that we teach you, those core foundations, is through a set of trading rules, right? So picking directions all well and good, and having different strategies and having different risk management's all fine, right? But you need a way to structurally apply it in the live market. And we'll actually give you a set of step-by-step trading rules that help you do that. One of the hidden benefits of that is that it helps alleviate psychology, as Tim mentioned before, helps the process become mechanical, which is really important. That's kind of part of that. And it's like a warm blanket over yourself as you try to trade, because it'll comfort you in making those decisions.
It's very hard going it alone, guys, out there. And this course is going to give you knowledge, but it's also going to give you a lot of discipline. And then you're going to have Mr. Karo over here making sure you stay disciplined, right?
Yes, I'm, as you can tell, pretty, especially if you watch my other podcast where I'm a little bit more less professional, that's the right word. I don't refrain from giving my opinion, and because you got to understand it's about mutual success. So if you're not putting in the work or you're not doing the right things, you best believe I'm going to tell you.
That's it.
Remind you. So in this program, it involves 2 face-to-face weekend workshops. So 2 separate weekends where you come into our office and you learn face-to-face for the full weekend. Live stream's also available, right? COVID obviously forced our hand with that. Yep. You'll be able to see the presenter's face. You'll be able to see their screen. You'll be able to talk freely and ask your questions. It's like being in the room, but it's just at a distance, right?
Carlo actually sits exactly where I'm sitting here.
Yep.
Right. You'll have the camera on him. You have the 2 screens up. You'll be able to see what's on his screen. You'll see him talking. You'll be able to see everyone in the room. Yep. It's like you're here, but you know.
Yeah, you're at home, and your dog's barking in the background. Yeah. You also get 4 months of online training, right? So we don't just teach you a bunch of stuff in a room for 2 days or 4 days and then off you go. As we said earlier, it's about long-term relationship building. And we run a couple of paper trading competitions as well. So we pit you against your classmates, and the person who makes the most money in the given time frame wins a prize. Yep. Won't tell you what that is. You'll have to learn about that later. And you get your own personal trainer, right? So it's about developing a mentorship, a one-on-one mentorship with one of our advisors. I'm a trainer. I've been here for 10 years. Look, everyone here has been here for like a long time, right? Now, Carlo mentioned him earlier. Your teacher is Carlocastellano, and he actually kind of looks like that little dude there. He wears glasses as well.
Yeah, you're pretty close.
It's actually pretty close. I don't think his ears are as big, but he's a highly successful professional trader who's been teaching and trading for over 25 years, right? So you're not only learning from someone who's a successful trader, but you're learning from someone who's a great teacher, which is really important when you're learning this stuff. Okay. He's semi-retired, but he still runs the education for us, and he still puts out trade recommendations. So if he sees a trade that he likes, that fits the rules that you've been taught to do for yourself, he'll actually put that in an email and send it to you. Basically, you're learning his exact trading rules.
Yep.
So the trading rules that we give you are the ones that he uses to find trades. The first weekend workshop is about learning the foundations, so technical analysis, bullish and bearish strategies, risk management, and Carlo's trading rules. The second weekend workshop is about learning option strategies. So we will cover calls and puts.
Yep.
We'll cover portfolio strategies like covered calls, the insurance. We'll cover multi-directional strategies like the bull put, the bear call, and a few other ones that we mentioned tonight. And more importantly, we'll show you how and when to enter them, right? We'll give you a set of trading rules that are specific for options, and we'll give you the cookbook and show you how to implement it properly.
And that's the big difference between us and getting any other online options education out there, guys. Like there's other stuff out there where you learn what a call and a put is. You might learn what a bull put is, but they're not going to teach you how to apply it to the Australian market.
Or when.
Or when.
Yeah.
Right. And that's the key thing to making money out of this, guys, is how and when and how you manage that. So money management, stops, all that sort of stuff. This is a very practical course, guys. Okay. Yep. It's not a uni degree where you're going to sit down and you're going to learn knowledge and not know how to apply it. This is all about applying.
Yeah.
Okay.
Yep.
So you'll know options, you'll know what they are. Most importantly, you'll know how to apply it.
Yeah. And you'll have the confidence to do it as well. You know, it's a complicated subject, as you can probably tell. But again, we've been doing this for so long that we've figured out a structured approach where by the end of it, most people are feeling comfortable entering these types of strategies into the market.
Yeah.
You have several months of online training, right? We have the 2 weekend courses are separated by 2 months of online training, and then you get another 2 months of online training where you have access to, again, your own personal trainer, your own mentor. You have access to trade recommendations chosen by Carlo. You have daily webcasts where we go through the market and we look for trades and we run through education. So Tim runs his webcast from 12 to 1 on a Tuesday.
Yep.
I run my webcast from 12 to 1 on a Wednesday. They're live. Old clients jump on, new clients jump on. The other advisors have 1 day a week as well when the market's open.
And there's one every day.
Yeah, there's one every day. Well, Monday to Friday. And if you can't make it, it's recorded. So you can watch it that night, right? I think that's very unique to our business as well. I don't think there's anyone else who does that type of thing.
No, not that frequently.
Yeah. And we'll give you all the market data. We give you market updates 3 times a day. And we'll give you all the technology. So we'll give you the trading platform that we use, plus all the calculators that you've seen us use today as well.
Yep.
It's worth mentioning, and I really like to harp on your personal mentor because, again, I don't think any other business in Australia gives you your own personal mentor, especially one with a lot of experience. So, again, I have 10 years of experience, I'd say, or something like that. Don't hold me to that number. It'll be roughly like that. Tim obviously has a boatload as well. Sam and Ben, pretty much everyone we've all been here for years, right? And we've all got plenty of experience, not only trading, but also educating and mentoring as well. So we're here to answer all your questions. Your assigned mentor is here to answer all your questions, help you run point, helping you to develop habits that are positive rather than negative, helping you fix mistakes that you're prone to making as a beginner. I know I'm laboring this point, right? But it's for very good reason because it's seriously good value, right? And when you're ready to go live, they're there to hold your hand as you're ready to place your first trade as well.
If you're going to sort of look at us, our biggest point of difference to any other educator in this space, I think anywhere, right? Even in the US, is the support. Honestly, it's the best support you're going to get anywhere in any course. And everybody here is experienced in what you're learning. We've all been through the course. We've all been educating in this for over 5 years. I'm coming into 10. Karo's been coming into 10. Ben's been here for more than 5 years now.
Yep,
so, everybody here has got a lot of experience in these rules and applying these strategies to the market.
Yeah. And I mean, like you saw how quickly we did the analysis on the extra and S&P. We're talking about this every day. We're living and breathing it. And we're always available for a chat, right? There's people who I speak to, I would say almost every day, that I've been speaking to almost every day for years, right? Because even though they're not learning anymore, they're trading. right? And you know, it's not about education at that point. It's about going, hey, I've seen this trade. What do you think? Or I'm in this trade and it's going against me. How can you help? Or what options are there? Or I'm in a profit, but I think it's going to go further. And so, you know, there's a lot of ways that we help people on a very regular basis. Or when you finished educating, your education to when you're actually starting ready to trade with real money.
Just want to check if there's any questions that have popped up.
That's probably a good point.
Just
probably click this one here, right?
Yep, perfect.
All right. So the investment of the program is $3,490. Okay, and that includes 2 weekend workshops, 4 months of online training where you have access to training videos. You've got market data. You've got the daily webcasts. You've got access to all the technology, including the trading platform and the calculators, and you get obviously those trade recommendations as well, right? And finally, sorry, you get your own personal trainer as well. I've screwed up the slides here because that's meant to be showing right now, but ultimately, if you are interested in this workshop, you'll need to be available for the dates of the 9th and 10th of July, right? So plenty of time to plan for that. And then the following weekend where you learn advanced strategies, that's on the 10th and 11th September, which you'd need to be available for as well. 2 full day weekends. They're fairly intensive. We'll provide you with manuals and we'll give you a few breaks in between. But yeah, you need to lock out the whole 9 to 5 weekend.
Yeah, so essentially what ends up happening is if you sign up now, you get a bit of pre-learning stuff just to warm you up.
Sure.
You come in, you do your first 2 days with Carlo, then you go away and you spend the next bit of time. It's almost 2 months there between those 2 courses.
Yep.
You digest and practice all the stuff you learned at the first weekend. Yep. So that way, by the time you get to the second weekend, you're feeling confident about technical analysis and rules and trading some multi-directional trades like bullish, bearish.
Yep.
And then the second weekend, you start learning options and get right into the strategies, right?
Yep.
So there's plenty of time to digest the information. We're not going to just throw a bunch of information at you on those weekends. You'll have 2 months to digest that before you got to come along to the second weekend.
I mean, again, this is perfect for beginners, right? So a lot of people go, oh, I don't have enough knowledge for this education. Well, that's the point of this education. Yes. You don't need to have experience. We'll take you from where you are now, which may be knowing nothing, to actually understanding technical analysis, to having strategies under your belt, to knowing how to manage your risk, knowing when to get in and when to get out before you even do so, right? I mean, these are important skills to learn, and it's something that we'll teach you slowly through mentorship over a 4-month period. And the education doesn't really stop there, in fairness. People, if you continue to trade through us and you continue to use our services and you maintain a relationship with us, the education goes for as long as you remain in contact with us, because there might be things that we add further on. You might find that your own risk tolerance and personality comes into your trading. We'll help guide that into a rule system that's more appropriate for you as an individual. It's an ongoing journey, trading. It's not something that you do overnight. It's something that you do for the rest of your life, right? And that's what we're here for.
And that's at the core of the success of Trader Circle, guys, is that a lot of people hang in because you never stop learning with trading, right? Different things happen. Markets behave differently for different reasons. There's some strategies that work better this year, but might work better next year. By keeping in constant contact with us, you'll get that inside information. Like, we're in front of it every day. So
just to be clear, not inside information.
You know what I mean.
Yeah, no, you'll get a professional opinion for sure.
That's it. Yeah.
If you look, the other thing that's worth mentioning, and I know we've harped on a bit here, is if you don't need some education, but you just want some support, you're welcome to open up a trading account with us and start a relationship with us where we give you some help. We can give you trade ideas and recommendations. You can, of course, watch those webcasts that I was talking about if you want to scratch up on some education or look for some trades as a group. We can give you expert advice on direction, strategy, risk management, and managing any positions that you're in as well. So if you just want a good team behind you, it's worth just opening up an account, transferring money across, and getting some advice.
That's about it.
I think that's it. Yeah, if you're interested, just type it in the chat box or give us a call. And we'll get back to you. But otherwise, feel free to watch the recording on our YouTube page. Feel free to check out any other education on our YouTube page where
Heaps
we're going
on there.
through. Yeah, there's heaps on there. And one good thing is our podcast, I think, where we talk about a whole range of different subjects. It's not, necessarily trading specific, but we kind of cut loose a little bit more.
If you enjoy this type of information about markets, guys, subscribe to our YouTube channel, support us, give us a few likes. And you'll keep receiving a lot of good information about the markets for free.
Oh, hell yes. Yeah. All right, guys.
All right.
I think we should finish up there.
Bye for now.